This episode is about ASML. The short version is simple. ASML's second quarter was not just a normal cyclical rebound. The numbers were strong, the margin stayed high, and management raised the revenue outlook for the rest of the year. In the second quarter of 2026, ASML reported 9.326 billion euros of revenue, a 54% gross margin, and 2.918 billion euros of net income. Put those numbers together, and they say two things at the same time. Customers are taking more tools, and they are upgrading capacity faster. But ASML is not giving up margin in order to ship more machines. It is still delivering at very high profitability. The guidance is just as important. For the third quarter, management expects revenue between 11 and 12 billion euros, with gross margin between 55 and 57%. For the full year 2026, ASML now expects revenue between 43 and 45 billion euros, with gross margin between 54 and 56%. That is the main signal from this report. ASML did not only beat one quarter. The company is also telling investors that the next few quarters look stronger than before. The reason is not simply China demand. It is not just a generic semiconductor recovery. The center of this story is artificial intelligence capital spending moving down into the semiconductor equipment chain. AI demand does not stop at NVIDIA's graphics processors. If NVIDIA and other chip designers need more advanced processors, foundries, such as TSMC, need to manufacture more advanced chips. Advanced chips require advanced process technology. Advanced process technology requires lithography tools. Extreme ultraviolet lithography, often called EUV, is one of the core tools used to pattern the smallest features on the most advanced chips. In practical terms, it is the equipment that helps print the tiny circuit patterns that make leading-edge chips possible. ASML is the critical supplier in that part of the chain. There is a second demand line as well: memory. AI servers need high-bandwidth memory. High-bandwidth memory lets the processor read and move data much faster. That increases demand for advanced DRAM capacity, and it also increases the need for more sophisticated lithography. So the chain is clear. Cloud companies spend on AI infrastructure. Chip designers sell more accelerators. Foundries and memory makers expand capacity. And eventually, that demand reaches ASML. Management said this directly. AI-related investment and continued progress in AI technology are driving demand for both advanced logic chips and memory chips. Advanced logic means high-performance processors, AI accelerators, server chips, and leading-edge mobile chips. Memory means DRAM and high-bandwidth memory. When both sides are adding capacity, ASML becomes a bottleneck supplier. Now look at capacity planning. ASML said its 2026 baseline for low numerical aperture EUV is about 65 systems. Low numerical aperture EUV is the main EUV platform used in today's advanced manufacturing. For 2027, ASML plans to increase capacity by about 30% from that baseline. Immersion DUV is following a similar path. It is not the most advanced EUV platform, but it remains essential for many mature nodes, memory applications, and parts of advanced process flows. ASML expects about 130 immersion DUV shipments in 2026, and it is also planning about 30% more capacity in 2027. The company is already evaluating additional capacity for 2028. That matters. Equipment makers do not plan capacity based on a few weeks of market mood. They need supply chain commitments, components, labor, factory throughput, and installation planning. When ASML talks about 2027 and 2028 capacity, it is reflecting customer demand that already extends into the medium term. There is another detail. ASML said low numerical aperture EUV demand for 2027 is already near full coverage, and 2028 has also received meaningful order momentum. In other words, the question is no longer whether customers are interested. The question is whether ASML can deliver the machines fast enough. One reason the margin was so strong is the installed base business. Installed base management generated 2.8 billion euros of revenue in the quarter, about 300 million euros above the company's own guidance. This business is about the machines customers already own. They pay ASML for software, productivity upgrades, performance improvements, and service. The goal is to make existing tools run faster, produce more wafers, and improve output without waiting for every new machine to arrive. That business usually carries attractive margin because a lot of the value comes from software and system optimization, not only from shipping another large hardware tool. It also tells us customers are under pressure. If a new tool takes time, the next best move is to upgrade the machines already on the floor. AI capacity is tight enough that customers are paying to squeeze more productivity out of existing equipment. China still matters, but it is not the main story in this report. ASML expects China-related revenue to be about 20% of full-year sales. That is still a large market. But the strongest part of this report is global demand for advanced logic, advanced memory, and AI-driven capacity expansion. Export controls remain a real risk. If restrictions tighten, some DUV systems and service revenue could be affected. But describing ASML only as an export control victim misses the bigger variable in front of us. Global AI capital spending is still pushing up demand for leading-edge manufacturing equipment. There are 3 risks to keep in mind. First, valuation. ASML is a high-quality company, but if the stock price already assumes a lot of good news, it can react sharply to any change in order timing. Second, policy. Export control risk does not disappear because one quarter was strong. Third, execution. The company says order momentum is very strong. In 2027, low numerical aperture EUV coverage is nearly full. Investors still need to watch whether those orders convert into shipment, installation, and revenue on schedule. The conclusion is clear. ASML's second quarter confirms that AI capital spending is not only benefiting cloud companies and chip designers, it has already reached the semiconductor equipment layer. Revenue beat expectations. Full-year guidance moved higher. Gross margin stayed strong. Capacity planning for 2027 and 2028 is moving up. This is not just a standard cycle bounce. It is advanced logic and advanced memory pulling on the same equipment supplier at the same time. If you want to understand whether the AI supply chain is still expanding, do not only watch NVIDIA. ASML is giving another hard signal from the equipment side.